Okay, today we're going to talk about the T account explanation, the running balance T account explanation, and then transporting from T accounts to trial balance or financial statement. So the financial statement will be the um, income and income statement, profit and loss, um, and also the balance sheet. Sometimes we call it financial position for the balance sheet. Financial performance for the profit and loss. So today example is called a scenarios given the opening balance of the balance sheet account and then the flows in the balance sheet. And you can see the flow of the transaction in the balance sheet and also the ending balance already given for the balance sheet account. Okay, so we're going to go through how the figures come up to the here. Okay, so the first one is the opening balance of the account receivable. I'm going to do the four accounts, right? The first one is account receivable, sales, accounts payable, purchases. So the opening balance is given in here. If you look at the opening balance of the balance sheet, account receivable 6,700. So we're going to write the date, particular, and then debit amount because account receivable is a debit, so it has to be the debit figure. Yeah, so that will be the you're going to write that. Okay, then we're going to look at it. The ending balance is given. The ending balance of account receivable, you can see in the ending balance 30th June 2004 has to be the 9,200. So we know that the ending balance is 9,200. Yeah, but we have to find a moving inside that. So account receivable, you can have a look in the cash receipt area because that's the cash receipt. And this is the cash register, right? They write the cash receipt, cash payment. So on the left hand side, the cash receipt journal, on the right hand side, cash payment journal. But while we look in the cash receipt payment, we are trying to find the other side of the account receivable. If you look at the cash receipt, you can see the cash receipt side debit the account receivable 52,000. What it means is debiting the cash and crediting the account receivable. That's why the cash receipt register is a debited. So behind the scene is this is the transaction behind the scene. Okay, I highlighted this. So that's a journal. So that means we have to transport credit 52,000 in the account receivable ledger. So date, write particular to the other side. That's the bank amount 52,000. Okay. And the next one we go look at it. Is there any account receivable in here? No, nothing else. So the 9,200 we already add to the ending balance. But the other areas, the information given is a bad debt is related to the account receivable. Discount allowed is related to the account receivable. So bad debt is so that John is this is behind the 300 is a direct bad debt write-off. So debit the bad debt expense, credit the account receivable. So that is the journey behind that. Okay, so to make it clear, so that is a journey. So that means we have to transport this one. Okay, we have to transport this one to the account receivable. Okay, so this is we have to transport this one to the account receivable. Okay, so that will be credit side on account receivable 300. So the date, the other side of the transaction is a bad debt, 300. Okay, and then the other one is a discount allowed. So when you allow discount to the customer, that means you are losing your revenue, and also you are when they paid it, you are losing your revenue, and then your account receivable has to be offset that. So that is a direct bad debt expense. So bad debt writing off 300 behind the scene discount allowed to the customer 200. That is me is discount allowed is a contra revenue. So revenue is a credit. So discount allowed is a debit. So debit the discount allow, credit the accounts receivable. Okay, so that is behind the scene journal. So account receivable has to put the figures on the credit side. Okay, so 30th June. The other side of the transaction, discount allowed, amount is 200. So now we got everything, but we are missing the figure because this figure has to come something. That is what we call is a credit sale, right? Because the reason if you don't have that figure, you're not going to get 9,200 ending balance for the ending figure is given. Because the ending figure is the total debit minus that, you got 9,200. So you have to calculate in an algebra way. But if you want to remember how you get that figure is, so you are adding that 3 minus that and plus this. Okay, so here is the formula, right? So add all these 3 and plus this and minus this and plus this one back. Okay, so that's the amount. So what do we have in here is 55,000. Yeah, so you can check that balance. If you add the debit total, check at the end of the Excel sheet, you get a total is 61,700. Credit total is 52,500. The difference is 9,200. That is account receivable ending balance. This figure has to go into here. The ending balance, account receivable is given. Yeah. So that's finished for one account receivable T account. Yeah. So the next one is we're going to do the sell, right? Sell T account. So because of this credit sale, what's the journey behind? Is a debit the account receivable, credit the sale. This is the journey behind that. Okay, debit the account receivable, credit the sale. So that means, so this needs to be transferred to sell. Okay, so the sale is not going to have an opening balance because at the end of the month, all the revenues and expenses are closed because the end of the month journey, right? So we're going to write at the end of the month we're going to write, this is coming from 30th of the 6th, yeah, 2024, and then amount is 55,000. Yeah, okay. Now we need to find the other sales. Do you have other sales? Yes. If you look at in here, yeah, cash sell. Yeah, sometimes we sell but we receive the cash. So this is behind the scene debit the cash, credit the sale revenue. Behind the scenes the journey is this one, 18,000 is this. Okay, that is a behind the scene journey. So that means we need to carry forward, we need to put this amount into the sale. So on the credit side, 18,000. So go to here, date, the other side of the transaction, balance, and 18,000. So now we can find the total closing balance for 30th of June is 73,000. Remember the sale has to be closed at the end of the month. So in here in the T account, we should be putting the other side of the sale, that is a trading account, because to close this one off. So trading account 73,000. But remember this figure has to go into your sales figure. Yeah, the 73,000 go to there. But we need to find the cost of goods sold in here. Cost of goods sold, this is a periodic inventory, so you need to calculate the opening inventory plus purchases minus the closing inventory. We know the opening inventory from the given information. Yeah, 7,000. Yeah. You know the closing inventory from the given information is 9,500. Yeah, but we don't know the purchase yet. We will find it out. Yeah, later on. So before we find it out, go to the accounts payable ledger, running account. So look at accounts payable opening balance. Given 6,100. Accounts payable is the credit account, so it's going to start with the credit side, opening balance. That it also given the ending balance. The accounts payable ending balance should be 8,600. So that's the amount we need to get. Okay, but we don't know in here, so we need to find in the running balance. So accounts payable, you have to look at the cash payment journal. Look at the cash payment journal. Do we see any account payable here? We go accounts payable 15,000. What it means is this is a credited cash, right? Credited cash, so that means debit the accounts payable. So this is a journal behind the scene. Okay, so you're going to have this highlighted. So it's going to flow accounts payable is going to flow as a debit. Yeah, it's going to flow as a debit. Okay, so your debit side accounts payable. So the date you write bank debit. Yeah. And look at the other thing. Do you see any accounts payable related one in here? No. The only thing related is a discount received from the supplier. So when you receive the discount from the supplier, your expense is reduced. So it's a contra expense discount receipt. Expense is a debit item, contra expense is a credit item. So you are going to credit discount receipt and debit accounts payable. Yeah, so then this one will flow into accounts payable. Yeah. So you will see here 30th of June 2024. The other side, discount receipts, amount is that. But we need to calculate the missing ones like account receivable. In here, missing one is purchases. We need to calculate, right? We don't know because it doesn't make sense if you don't have that figure. How you get the ending balance for the 8,600? Because of that figure, so that plus that minus that 2, you got 8,600. So we need to find out the missing one. So the missing one will be the formula. This you add this 3 on the debit side minus this plus this. Okay, so here say you add these two minus this and plus this. Okay, so that you got a figure for the purchases. So that figure is 17,900. Okay. So accounts payable should flow into here is given as 8,600. Yeah. So we need to find out the purchaser. Purchaser is not only this one. There's other things purchases in here. So the purchaser is also the expense account. So it's going to clear at the end of the month. So 70,900 is accounts payable. What it means is what is the debit side? Debit has to be purchases, credit has to be accounts payable. That is a journal behind the scene, right? There's a journal behind the scene. Okay, so that's a journal behind the scene. So we have to carry forward purchases on the debit side for that. Okay, so that will be 30th of June 2024 purchases 17,900. Is there any purchases? Look at on the normally you look on the cash payment side. You see, I see the 2,100 on the cash payment. What it means is a credit the cash, debit the purchases. Okay, this is the journey behind that. Credit the cash, debit the purchases. Okay, so that means the purchase one has to be put it into the running account. So that will be 30th of June. 30th of June. Yep. Back is coming from the cash register. Back that. So the total balance will be 20,000. That's a closing balance. Yeah. And remember the purchase expense account at the end of the month. You need to close it all. So the other side is a trading account. Okay, the other side is a trading account. Okay, so that 20,000 will go into here. Purchase is the one we are missing. Okay, so cost of goods sold will be this plus this minus this. So that plus that minus that. So what do you got? So gross profit will be sales minus cost of goods sold. Yeah. So we need to find out the rest of the missing one in the green color, but you should get a net profit of 3,300. So that net profit will flow into the balance sheet as a retained earning. You need to find out the missing one in the green highlighted one, and you should get a net asset is a 23,300. It has to be equalized with the owner equity balance. These are the ones you need to find out. I show you the 4 of them. So you need to find out the remainder of the expense, furniture and equipment, accumulated depreciation, plant and capital. Yeah. So some of them are it's not given, but it's better to find in the running balance like accrual of the expenses. There's not given that it's a different one, accrual of the expense balance sheet account, bad debt, discount receipt, discount allowed, inventory, wages, drawing. Yeah. After you finish that, you're going to put it to the relevant financial statement. Some of them will go to the profit and loss or income statement. Some of them will go to the balance sheet. Then you balance it out. Okay. So that's all from me. So probably you understand about how T accounts are doing. So T accounts has to be whether debit or credit that will flow into the trial balance. Now, as you remember, there are 2 ways you do that. I'm talking about the T account, but there's another one, balance in column format, which one has to be balanced at the end of the each account. So the key in here is if you look at each one. So if you look at a cash receipt, so cash receipt journal is on the cash side. So you need to think about the credit side. What's the credit side will be cash receipt in the is journal. If you see that because the debit in the cash. But if you look at the cash payment journal, that's the credit side of the cash. So you need to find what will be the debit. Okay. And also here given like depreciation expense, so you need to calculate what the what they give you the depreciation information, so you need to calculate what the depreciation expense will be. So when you get a depreciation expense, remember it's not one-sided. So debit the depreciation and credit the accumulated depreciation. So that value will go to also the accumulated depreciation account on the credit side. Okay. Thank you. So I will see you in the next presentation.